election, uh, as far as some members of the MPC are concerned, they're talking now the tail end of 2015. So, after building up expectations that it would happen last year, it's been delayed for another year. So, not expecting a lot of change there, but nevertheless, uh, you have to look out for the usual volatility surrounding that event. Friday will be the big day, of course. It is the first non-farm payrolls figures for the year. A lot of good data coming out of the USA, and we've had good data coming out of the USA now for about 4 or 5 years. It's only just last year that people finally started noticing it. But NFP, again, it's the first one of the year, so you have to watch out for that. The markets came out shooting guns from the open, it looks like, pretty much. I'm looking at only a handful of charts this morning. It is the beginning of the year, and because of that, and as well because of generally the strength of the trend across the board, and the strength of the flow into the US dollar. We've not had a lot of SR structure develop. And so I've mostly been going on flow and the direction of flow, and we'll come back to that a little bit later on in this presentation. But from a technical perspective, there are 3 charts that I'm looking at this morning, and so I'll just run you through those. First off is the Euro USD, and I'm looking at a trend wall. That trend wall goes something like this. All right, that's how that trend wall goes. And what happened last week is that the price fell down to that level, and ordinarily you would expect that wall to give support, and she went and closed pretty much on that wall, and then on the open she's gapped down and jumped the support. Right now, whenever the price jumps a support over a weekend, that tends to be a fairly significant event. Your ears have to kind of stand up, and you have to pay some attention to that. I think it's meaningful, and particularly because it's jumped in the direction of the preceding trend and in the direction of the preceding momentum. And so the viewpoint that I have is that, well, if this is a support wall, then the price now being below that actually is meaningful, and I would look for a follow through to the downside. I would say, she jumped the support becomes resistance, and so long as the price now can remain below that 120 price handle, and it doesn't matter now, even if you get a bit of a overthrow on that wall, right? So long as she's able to remain below the 120 price handle, I would consider the bearish momentum on Euro USD to be intact, and certainly it would be worth triggering some shorts, albeit cautious shorts, but worth triggering those shorts on the underside of that wall, and so long as you're not getting those hourly closes above the 120. So, and that is my reading of the Euro USD right now. It's a short-term read, just based on the fact that the price has jumped a support wall, and I'm taking that as a measure of bearish strength. So long as they can hold the price below that level, I think the bears remain pretty firmly in charge. Mr. Amit, would you consider this trend wall as a possible support if price closes above the trend wall on a 4-hour or daily basis? Yeah, that is likely to. So the type of walls which I mark, I don't spend a lot of time playing with trend lines which are insignificant. I like to mark lines which act as support and resistance. And so if you wanted to look for an overthrow. From a technical perspective, you'd be looking at a move something like this. So a break back up above it, a pullback, and then you'd want that wall to hold as support and follow through to the upside, right? So you'd be looking for a scenario like that. From a technical perspective, it is a equally valid scenario. My preference right now is to be looking for the short play, and if I'm taking that short, I'm not going to be doing a stop and reverse, right? So if you are looking for a long opportunity, would it be sensible to be buying right now? The logical conclusion based upon that wall is no, because so long as the price remains below that wall, the instrument is a short. It doesn't matter even if she's heading upwards towards that wall. So, she collapsed 100 pips down to 1890, and then she's rallied back up 100 pips. She's headed up towards the wall. But so long as she remains below that wall, technically the bears are still in charge. And so if you're a bull on this, you don't want to be buying right now. But once she breaks up above the wall, that invalidates the bear bias in the near term. And then on a pullback, you could be looking to load long, right? My preference, just based on the direction of the flow, is to say that so long as the week can remain bearish, and I'm taking the week at 120, so long as the week can remain bearish, I'm happy even with an overthrow type situation where you get an overthrow upwards and a throwback down below that wall, and I'd be quite happy holding the shorts on the back of that. All right, just quickly, there's a thing from Jen Sora who says they're not getting any audio. But if you're not getting audio, Jen, you're probably not hearing me now. But you need to shut down any of the programs that you're using. If no one else was getting audio, I'm sure we would have had a dozen messages by now. Yeah. So one moment, let me just tap that. Okay. All right. So so that's the Euro USD. Like I said, it's something very very near term. Let's take a look. Let's take a look at the USD JPY. Right. So this is the USD JPY, and I have a couple of levels on the USD JPY. I'm being a bit crazy with USD JPY, and I've made a lot of pips last year fighting the flow of this, right? So I think that that strategy generally is going to remain in place, playing the technical shorts on the instrument. It's not necessary just because there is a trend that you have to play the trend every single time, right? So, if there's a technical reason and you get good risk definition and you can get a tight trade, it's quite often worth certainly at least contemplating the trade in that kind of circumstance. So there are two levels that I'm looking at on this instrument. First up, the near-term one, and so I'm just on an M15 time frame here, and what I'm looking at is this structure here. So you see the price kind of move up here, make support and break higher, right? So we've got a support block here, and then what happened is that the price actually broke down, and we've had that support block being retested, and it was retested last night also. And after being retested, it's kind of so what we're looking at is that there was support, and it looks as though that support is turning resistance, right? So I would say that so long as this block holds, and that extends, it's not a very wide block. It extends between 120.50 and 120.60, right? But so long as that block holds, I'd be prepared to uh, look for a touch short off of it. I'd be prepared for that, to look for a touch short off of it. Uh, the risks involved in that, of course, is that the price could end up blowing straight through it. And if she does blow straight through it, then that would become a trigger for a technical long, right? So she's in a bit of a strange place right now where she is. It's a short at that block. You can't buy here, but if she ends up breaking through that block, it's a strong trigger uh, suggesting that she would push for a new high. So, but my preference it remains for a short on that block. I think that um, even under that block, it's not a problem. And so long as she's below that block, technically, I would consider the instrument to be actually a short play, and that's probably more the key issue. I'll zoom out a little bit here and where I've marked that from. So we've taken support here going back to the 21st of December and just resistance on the cluster there from the 29th to 30th of December. And what was interesting about this wall, and it's the upper wall, which I have particular interest in. So you can see the upper wall taken from there and from there. What was interesting about this wall was that when she went and hit, you had quite a solid resistance there. So the instrument collapsed to the tune of almost 100 odd pips. And so what I'm saying is you need to have that wall marked on your charts. And if it happens that the price can push there again, I wouldn't be surprised if there was another reaction at that wall, right? And if this one was significant, then the next one would be significant too. So, right now we're talking about resistance here. Even if she pushes through that block, and I've drawn it in the near term, if she pushes here, she's going to push to about the 121. But remember, if the price moves sideways, that target to that wall could be a lot higher. It could be 122, 123 even, right? But the next time she goes and strikes that wall, there's a short play there. And I'll be looking out for that short. So USD JPY in the near term, it's about that 120.50, 120.60 area, which is just a cluster flip zone, support becoming resistance. But if she pushes through that, I'm still fairly one-dimensional on this. All right, that's what I'm looking at. So let's go to an hourly time frame. Let's see if we can zoom this a bit. There you are. All right, so that's what I'm looking at. I'm looking for a strike on the underside. And a strike on the underside, there will be potential for a significant move off of it. And so on the watch for that. Maybe it happens during an FT. Right, so if we have a flat movement, sideways movement on this instrument leading up to an FT, and then you get 150, 200 pip move in 5 minutes or something after that announcement, and she goes and bangs on that wall, I'd be quite happy to take that even after the NFP. All right. Okay. Right, so that's the USD JPY. All right, let's have a look. What else we've got? The last one that I'm looking at from a trading perspective this week is NZD JPY. All right, so NZD JPY, it's going to be a little bit of an awkwardly drawn wall, right? But again, we're going something like this. And in fact, there might be several ways of marking this support resistance wall. There might be a bit of a There might be a bit of a zone there, maybe something like that. And I'm sure someone will probably do this too. So look. Yeah, so maybe something like this, right? Um, so the plan with NZDJPY is also to look for a shorting opportunity. I think she could push as far as 92.80, 92.90, around about that mark. And so really going to be playing in defense of the 93 handle and again looking for a shorting opportunity off of the back of that. And it's one of those, again, if it holds, we could be looking at a much more significant move down, maybe back into the 90s, maybe even sub 90s on this particular instrument. Make sure you're using your swap-free account for this trade, considering that the overnight carry could seriously damage your equity if you're holding it for even if you're holding it just overnight, it tends to be quite a lot, right? So if you've got a swap-free account, this one's for the swap-free account, but look for a shorting opportunity on this instrument off of that rule. And that's it as far as the technical levels are concerned for me this week, right? So I have the Euro USD, USD JPY, and there's NZD JPY, although my preference from a structural point of view right now would be USD JPY over the NZD JPY. Nevertheless, with the NZD, we're looking for weakness in the NZD component of this instrument, right? And hence I'm quite optimistic that we could see failure as she heads up towards that 93 price handle. I think it's going to be worth a play. You might even mark something like this on the instrument, right? So you might even mark something like that. There are several zones there that you could potentially be looking at. So you want to have all of those marked, right? So those are the ones where I'm interested in trading near term. Some general perspective now, which may be worth looking at. Let's start with NZD USD. Is NZD USD, and we have resistance on the instrument at around about the 80 price handle. That's where the resistance on the instrument is. Pretty much the whole of the last year, we've been talking about shorting NZD USD and selling the rallies. And I think that strategy remains in play, right? Not only because of this kind of situation with the US dollar and positive flows into the US dollar and what have you, but because that is the plan, is the announced strategy and plan of the Reserve Bank of New Zealand and the government of New Zealand. They're kind of working hand in hand, and and they have actually intervened in order to weaken the Kiwi dollar. And I don't think, even though there was some positive news last month, and people started commenting that the Reserve Bank has kind of backed away from those dovish comments, has become a little bit more hawkish. Nevertheless, the stated policy that they have is for a weakening Kiwi, and so we will continue to look throughout the course of the year for that. And I think that as long as she remains below the 80 price handle, she remains a short play, and I would be quite happy selling any rallies of any nature in the Kiwi looking for a resumption of a bear move in this instrument, particularly if she moves up towards the 80 price handle. If she moves up through the 80, that would probably have me sitting aside until she probably reaches 86 or 87 or something like that. But the idea is that we're looking at a ceiling here. So this is the daily time frame in the Kiwi dollar, and the idea and the thinking is that this is a ceiling here, and the Kiwi has topped off, and even if you find rallies and we get a further protracted sideways move, the net result will be a collapse in the instrument. And certainly over the coming months, if I had to make some kind of wild prediction, then why not to be talking 66 on the Kiwi dollar, right? So that's the thinking on Kiwi dollar. I think we would continue looking for weakness. Certainly it was a successful strategy last year, and I do believe that it will continue to be so. Euro GBP, right? So Euro GBP, she hasn't had a great year in 2014. She hasn't had a great year since 2002. She hasn't had a great year last year. From a technical perspective on the wider time frame, we're looking at something like this, right? So this is the block. In fact, maybe it's a little bit higher. Maybe it's this one, right? So that is between 80.30 and 80.60, and so that is the block which I think is defining the downtrend on this instrument, right? Okay, so it's kind of resistance, 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 resistance. And so the idea is that it doesn't matter if she rallies, so long as she remains actually below that block, then technically the bear momentum in the Euro GBP remains intact. But if it happens that she's able to breach that, I think that's going to be a big deal. All right, so if she can breach that, that's a very big deal. And on a pullback, if that is resistance, then you can expect that that is something that would turn support. And at that point, you would be looking at a structural change, a structural shift in the direction of the price on this particular instrument. So Euro GBP, it is worth kind of monitoring, right? But from a wider perspective, it's all about that particular level. It's all about this this resistance, which is formed just above the 80 price handle. And so, like I said, even if she's rallying up to that point, my first instinct would be to look for a shorting opportunity, and only once she's broken up through that block, I would start becoming a little bit more serious about long plays on the pullbacks on this particular instrument. We're also looking at GBP JPY, right? So support turned resistance on GBP JPY. That there is 500 pips away. Okay, so don't get too excited about it. 400 pips from, about 400 pips from where we are right now. Right, so don't get too carried away with that. But we've had support and resistance there. This is on a H4 time frame, and what's interesting about this is if you want to put it side by side with USD JPY, right? So we were looking at USD JPY, what, on a 15-minute? How different? I mean, I don't know. It's a bit uncanny, right? You see the similarity? Is everyone seeing that? So this is USD JPY on a 5-minute time frame. And let me just remove that so it doesn't distract us. And this is the resistance block here. That's the resistance block. Okay, so here's our structure. And let me flip back to GBP JPY. This is GBP JPY on a H4 time frame. Right? Does everyone get that? Okay, so it's very similar, right? It's very, very similar. Only here you're playing for hundreds of pips, and on USD JPY, you might be playing for a handful. But uh, what if that's a price pattern? And what if, however price behaves on USD JPY, becomes a forecast for whatever is going to happen on GBP JPY? So, if we see price blasting up through that block, then maybe the same would happen on GBP JPY. The price would go and blast up through that block. Something worth considering, right? If the block is holding on USD JPY and you get a much more significant fall, maybe there's a much more significant fall to come here on GBP JPY, but off the back of that pattern. A little bit of pattern hunting here going on. And what I'm looking at is to say, if you have a structure on USD JPY and you have the same structure on GBP JPY, wouldn't it be interesting if the price behaved in exactly the same way, and you could use the price behavior on one of those in order to forecast the price behavior on the other? So GBP JPY has my intellectual attention right now. I think it's interesting just from a structural point of view, and that similarity there is a little bit uncanny, right? So some kind of similarity there. Okay, if and a big if we see some USD weakness, what would your preferred pair be to play that besides USD JPY? Probably dollar Canadian. Actually, any of the Kiwi crosses. Well, dollar Canadian, maybe AUD USD. I'll show you the dollar Canadian first. All right, so this is dollar Canadian, and if you're looking for the weakness, and there's a reason why, right? So let's just let's look for a reason why you might want to short this instrument. So like that, probably. Right, that's just a barrier wall. All right, that's a barrier wall. So you could look for a short on the underside. And there's something going on here quite funky with support resistance. And on the H4 here, I connected that with that. And it just seemed to make sense for some reason. But there may be something nearby here. Cautious though, cautious. And I'll tell you why you need to have that caution, right? The reason you need to have that caution is because the new year has just begun. And you can see one line that I have marked on pretty much every chart, which is that blue line, right? That blue line is the yearly open price. And if you're kind of looking, see on all my charts, you can see that blue line, right? That is the yearly open price. That's the price on the 31st of December, or it's the closing price for December. That's the only line in this month that you really need. If you just had one level marked on your chart, it would be that one. And generally speaking, if you imagine any candle, right? It doesn't matter if you're imagining a H1 or a H4 or a daily or a weekly or a monthly. And now imagine a yearly candle. And what we've got actually going on here right now is that the yearly candle is looking like this. And, the price is going to do this around the open, just like it does on any candle. But at some point, you're going to get an expansion, right? And once you've got that expansion, you're going to hit the high or the low of the year. Right now, the reason I look at that yearly level is because you know how an hourly candle might move 20 or 30 pips, and how a daily candle might move 100 pips. A yearly candle can move 1,000 pips. So if you're taking a position at this point in the year, in the early part of the year, when that yearly candle has just opened, and if you get the direction of the flow right, and if you hold that position for 3 or 4 months, you can make a heck of a lot of pips off of that. All right? Make a heck of a lot of pips off of it. So there is potential at the beginning of the year which doesn't exist at any other time during the year. This is the only time when you get to trade the yearly candle, right? So have that level marked and consider trading in the direction of the flow and give that a bigger priority, right? Unless you have a clean, clear, short-term technical. But if you're looking for a position trade, that yearly open is the most significant level for you. And it doesn't matter if the price crisscrosses through that even 3 or 4 or 5 times. Eventually she will break. And once she breaks, there's going to be some pips there that you can pick off. And you'll be able to pick that off for at least the first quarter and maybe longer, maybe even the first 6 months of the year. All right, so it's a new candle. It's just started. It's a new yearly candle. It's just opened, and you want to try and take as much advantage of that as you can. It's a time to be thinking about building a potential long-term position that you might be holding for a long time, for many months to come. That might sound a little bit crazy, but that's how it is. Let me give you an example here, right? So this is the Euro USD, and I'm just going to go back on the H4 time frame and zoom out a little bit, and let me see if we can scroll back a little, right? And we're going to go to and here we are at the beginning of a new year. If there's one thought which you're going to be factoring into your thinking, it's going to be that. It's going to be, there is the yearly open, the price is below it, and what that means is that the candle is expanding downwards. And I would rather be on the side of the flow at this early stage in the year than to be fighting it deliberately, right? That's the idea. So when we're looking at the dollar Canadian, same kind of issue. Your yearly open here is at 116. That's where the yearly open is. The only one that I've decided to fight the flow on is USD JPY, but I'm giving her a lot of room. So there are my walls, right? And I will be looking for the price to reach the underside of the wall for a more significant play. I'm prepared to give her the room. I would only get excited about that short once the price fell below the year. There's the year there. So if it happened that the price went and fell below 120, below 119.80, then I might get a little bit more excited about this and say, hey, you know what? Not only have I played a technical short, but the direction of the year has changed in my favor. And imagine how long I might want to hold the position after that. So it's just something as a trader you have to factor into your thinking, particularly at this stage in the year. Okay, GBP USD. There's a couple of questions about GBP. All right, so sorted out already. If you have time, would you be able to analyze GBP USD? Do you see current level as an opportunity to go long for mid-long trading, or do you see it trading in a range below 155 for some weeks? movies extended room to be setting up for decent buy opportunities. Everyone's thinking about buying GBP USD. So I bought GBP USD and I was buying it here inside of that consolidation as she was tapping off the pretty much the 156 price handle, right? That buy has been invalidated now. And I was buying, there was a technical. I had a couple of trend walls which I had a couple of trend walls which I was using in order to determine that. So I was trying to mark it on here, that level, until eventually I was stopped from that trade. All right. So as far as I'm concerned, the buying opportunity, I don't have a technical reason right now to be long on the instrument. And the longs, they were there. They were there at the 156 price handle. Once the price broke below that, it invalidated the long bias that I had on the instrument. Now, the fact that the price broke down below that, okay, someone a lot more savvy than me would have said, hey, you know, there's a good opportunity to sell. As it happened, I went on holiday, so I wasn't going to be doing that. But I think I don't have a technical reason to be buying, but if we look at it from just the perspective of flow and the direction of flow, I think that would probably make the easiest analysis right now. And what I would say to you is that where she is right now is sitting just below the weekly open, right? There's your weekly open there. The analysis on this is pretty much the same. The breakdown is the same as the way that we presented Euro USD. That's the weekly there, 153.20. And I think that so long as she remains below 153.20, I would consider the bears to be in charge. I'm just going by the direction of the week here. If it happens that she breaks up above through that, at that point, if you wanted to attempt cautious longs, fair enough, but she would need to remain above 53.20 for you to be holding onto those long positions. And the reason I say cautious, because the year opened at 55.60, and the direction of the year right now is down. And if you wanted to become a serious long player, particularly from a position point of view, you'd want to see the price up above through that level. And at that point, you would consider the flow to be on your side too. All right. So I would be very cautious about buying right now. Right. I can be cautious and be wrong. I'm perfectly happy with that. But I would rather I would rather not buy and be wrong than to buy and say, hey, that was a bit stupid because the week was down and the direction of the week was down. And it's very easy to get caught like that and to get caught on the wrong side of the flow like that. And it's one of those things that you do it and it pays off, and you do it again and you go broke. Right, so it's a very easy bad habit to acquire, and that's why I'd say, just be careful with that. You'd rather have the wind in your sails than to be fighting the direction of the tide, so to speak. But that's the GBP USD. Okay, I think my work here is done. I don't think there's any more questions there, so we've covered all of those. Thank you all for taking the time out to attend this morning. I know some of you are in far parts of the world. You're probably up at 4 in the morning or something watching this. So thanks, guys, for doing that. I'll be back here in 2 weeks' time. So today's the 5th. The next time I'm here will be the 19th. Just check that. Yep, my math is good. And I'll be here on the 19th, FX Street. If you've registered, we'll send you out an email alert to let you know, and I might even send you one myself. In the meantime, if you like what you've heard and you want to learn a little bit more, take the opportunity to check out my website. It's www.wmdforex.com. Thanks to the team at FX Street for providing the platform, and I'll see you the next time. Cheers, fellas. Bye.